This video is brought to you by the amazing courses in the links down below. Use the coupon code as well.
Hey everyone, me Kevin here. In this video, I'm going to explain my thesis on NIO versus Tesla. Here's a little bit of background. NIO is a Chinese company that's about 5 years old, compared to Tesla, which is around 17 years old. NIO manufactures 3 vehicles: a $54,000 EC6, a $52,000 ES6, and a $67,700 ES8 to rival the Tesla Model X. These vehicles are only available in China, and COVID, as well as trade tensions between China and the US, have slowed NIO's expansion plans into the United States. But here's what I like about NIO. NIO, much unlike many other car companies that are getting into the EV space, is focused on self-driving, like Tesla. To me, the future of EV is not, yay, it's electric. That's great for sustainability, don't get me wrong, but it's self-driving and autonomy. And like Tesla, NIO is using Intel's Mobileye platform, which is what Tesla actually used in their version 1 of Autopilot in 2016 and prior, until Tesla finally manufactured its own autonomous driving system. I personally prefer, by the way, that Tesla has its own driving system, their own autonomy system and software and chips, rather than relying on Intel and Intel's division Mobileye, which Intel bought. It was an Israeli company that they bought. But let's focus here on NIO for a moment. In April through June of 2020, NIO delivered around 2,263 ES8s and 5,451 ES6s. The EC6 is just getting released, so now they're going to have 3 models of vehicles on the road, just as they're beginning to scale some of their other models, which are relatively new compared to Tesla. Tesla, on the other hand, delivered almost 30,000 Model 3s in that same time period between April and June. In fact, they delivered 29,684 just Model 3s. That doesn't even consider the Model Y alone in China. So right now, Tesla is absolutely outpacing NIO. There's no doubt about that, even in the Chinese market, despite the fact that Tesla is an American company. This is also leading Tesla to expand their Shanghai Gigafactory, so that way they can, instead of producing 500,000 vehicles per year, produce as many as 1 million Teslas per year. However, Tesla's growth isn't stopping NIO from continuing to sell cars, and at an improving rate. NIO, after all, is a younger company, substantially younger. And some say that NIO has an advantage where Tesla does not because of NIO's virtual assistant, which is much more capable than Tesla's voice activation system, which honestly, as a Tesla owner, kind of sucks. And this is something, having a virtual assistant, that Tesla has considered but has shied away from actually having. Some say NIO is winning because of the NIO community. NIO almost creates a cafe-style Apple Store environment where you can be a part of the NIO community and hang out at their NIO stores, something that Tesla has not done. And yet others say NIO is succeeding because they have options that Tesla does not, like fancier seat options that give you more capabilities with footrests and other options that just don't exist at Tesla. Now, to me, that all sounds great, but it doesn't really matter. What matters to me is the data. And here's the fact. NIO's earnings report shows that NIO is growing. In fact, this is NIO's prospectus, and what we can see in their prospectus that's filed with the SEC here in America, since they are a listed company, we can see that they have delivered, as of June 30th, 2020, 46,000 vehicles. This is certainly a far cry from what Tesla delivers. However, they're both in that ramping phase. In fact, you can see that ramping phase happening here with the ES8, for example, where you've got this sort of beginning of this exponential growth trend happening. And then certainly over here at the ES6, you've got a little bit more stability in sales. It's almost like you had a little bit of cannibalization happening here, where you've almost got a decline in sales in the ES6, potentially because of this growth in sales of the ES8. Though it'll be really interesting to keep an eye on this and track this, because the last thing we want to see is Tesla taking all of the business away from NIO if you're a NIO investor. If you're a Tesla investor, well, Tesla taking away the business from anybody would certainly be a good thing. So things to keep an eye on here, but there's something else that's buried in these earnings report that, in my opinion, is potentially a bigger issue. NIO does not manufacture its own vehicles. Instead, NIO partners with a state-run manufacturing facility and guarantees that state-run facility against losses. This means NIO and NIO shareholders take the loss when NIO tries to become profitable if there's any issue at that state-run manufacturing plant. The state-run facility has a 5-year contract with NIO, and unfortunately for NIO, I believe it's going to be very difficult for NIO to escape the grasp of that state-run manufacturing facility by 2023 when that contract ends. It's not like NIO can just say, well, thanks for the 5 years, y'all, we made our own plant. It doesn't really work that way. And this is a very different approach than what Tesla took. Tesla is a 17-year-old company that created its own factory and its own assembly lines, and now they're able to ramp specifically for their vehicles at a much faster rate. So this is something where, as a Tesla owner, you should be proud of Tesla's vertical integration, though the problem too is we don't really know how great the Chinese Communist Party is at running manufacturing facilities. And honestly, that's my biggest concern about NIO. It's one of the reasons I also generally don't invest in foreign stocks. I have no idea how the Chinese Communist Party operates. I don't know their politics with respect to their country. I have limited knowledge on how well China might actually be able to innovate in these assembly lines, as opposed to maybe just kind of, sneak into a Tesla facility and kind of see what's going on over there and then implement those practices. And honestly, in such a case, I'd rather be an investor in Tesla. All I know right now, though, is looking at NIO's earnings report, is that their current profit margin on the vehicles that they manufacture with the Shanghai plant has been negative up through about June, and their current profit margin is 5.15%, which is absolutely atrocious. Here's what that means. When NIO manufactures a car and sells it for, let's say, $100, every $100 they sell, NIO takes 5.15 cents as gross profit. Tesla, for the same $100 that they, produce and sell vehicles for, they take around $24 to $26 in gross profit. And that's expected to grow to $27 to $29 for every $100, or a profit margin of 27 to 29%, possibly as high as 30%, as Tesla continues to scale their stamping facilities and innovating their, manufacturing process by simplifying. And this is what Battery Day was all about. Battery Day was all about how Tesla plans to integrate their battery into the structural components of the car to simplify the manufacturing process. And when you simplify the manufacturing process, not only do you reduce the cost of the vehicle, but you also increase profit margin. And profit margin at any kind of manufacturing company, a manufacturing-based company, is the key to sustained profitability. This is an issue for NIO. I do not like that. Now, obviously, NIO is expected to grow this margin. They're not going to stay at 5.15% forever. This is obvious because when you have 3 vehicles and you've barely sold 50,000 vehicles by the end of June 2020, you can't expect to be at scale. You can't look at the profit margin and go, okay, this should be profitable. No, NIO is a money-losing company right now. And that is where the opportunity is in NIO. Once NIO reaches scale, and their profit margin grows to even say 15% instead of Tesla's 25%. Heck, even if they go to 18% or 16%, somewhere in that range, their profit margin will triple where it is now. And so even if they do not reach a Tesla profit margin that we have at Tesla today, they'll still reach an early Tesla margin as Tesla was first beginning to scale. And it's at such a point that if NIO continues to gain market share and they gain scale and they gain margin, if they can produce 15,000 vehicles per month, then NIO stock could easily double in value where it is now. NIO could easily be a $40 to $60 stock in the future. That might be 2022, that could be 2023, or it could be 2024, as long as they get the profit margin to be over 15%, ideally over 20% like where Tesla is, but we'll see. If they can get to 15 to 18%, that'd be great, and they continue to gain market share. And so this is what has actually led me to add a 1% holding in my portfolio to NIO. I'm going to watch NIO's growth very closely for signs of any kind of stalling in their profit margin growth or their sales growth. That's going to be key. NIO, don't kid yourself, it's a money-losing company right now, and an investment into NIO is a bet that NIO will be able to improve their profit margin like threefold, and that a Chinese Communist Party state-run facility is going to be able to manufacture at scale for NIO. This on top of the Chinese consumer saying, you know what? I'm gonna give NIO a shot. I like NIO as an alternative to Tesla. If NIO sales decline in the next quarters and we don't see that substantial growth in profit margin, then NIO could be a very risky stock to hold. This means there's really nothing propping up NIO's stock right now other than hopium. That is, the hope that NIO is going to be able to continue to convince consumers to buy their vehicle and that they'll be able to get to scale with at least a decent profit margin. I do not expect them to get to the same kinds of profit margins that Tesla can, because again, Tesla manufactures all of their products in-house, and this allows them to scale their assembly lines and eliminate waste that other manufacturers might not be able to. This is the same thing that Tesla does with its own autonomous driving software. Just to give you an example, Tesla's self-driving chips are much more efficient and use less power than Mobileye, which is the software and hardware that NIO uses, because Tesla has way less parts and pieces and complications to it. Why? Because Tesla's chips are designed for Tesla by Tesla. Mobileye chips are designed for hundreds of cars. One of those happens to be a NIO. And they all have different sizes and capabilities, and they look different, and they drive different, they react different. So Mobileye chips have to be much stronger and more powerful than Tesla chips. But unfortunately, stronger and more powerful is more expensive, it's heavier, it uses more energy. And this is where Tesla, by being vertically integrated, continues to dominate. This is why I have a very bullish thesis on Tesla. This is why Tesla is my absolute largest holding, and this is why I will continue to invest in Tesla. However, I can't count NIO out of the race. And as a potential hedge, if I was going to pick another auto manufacturer to invest in, NIO might be the copycat that's actually worth putting a little bit of money into, because that copycat model is starting to work, or they'll just go bankrupt. Thanks so much for watching this video, everybody. If you liked it, please consider sharing it and subscribing, and folks, we'll see you next time.